right, let's get back to the big economic headlines and all the things that you should be keeping on your radar. Joining me right now live here at the New York Stock Exchange, Thomas J. Hayes, Chairman, Managing Member, Great Hill Capital. Thank you for being with us. Glad you're here. So I was saying that we've gotten in the prints today, GDP, ADP, PCE, and what we saw was a little lighter than expected on all of them. Different vibe than earlier this month where everything was coming in a little stronger. And, you know, the idea is the question whether or not the bear case has legs to stand on, because there are a lot of folks who are still looking for recession. What say you?
I think it's a Goldilocks scenario, Nicole. I think that this is going to give the Fed the proper cover to wind down the tightening cycle. I think everyone's kind of nervous about the August-September volatility. They're the worst 2 months of the year seasonally, except for the fact when you have the S&P up 15 to 20% through July since 1905, the rest of the year on average is up 9%. So I do think there's a lot to do under the surface. And if you look at a lot of stocks, 48% of the all-world country index is trading below their pre-pandemic highs. So as managers have to play catch-up, because most managers missed the 20% rally, there's a lot to do.
So you think they'll probably be buying, which could give a boost to the markets?
I do think, but I don't think they're going to be buying the same stuff that led the first half. So I think the Magnificent Seven will do just fine, but they're not going to outperform. I think the real opportunity is going to be below the surface. You're going to see these managers, if you look, the Barclays hedge fund index through July was up 6% versus the S&P was up 20%.
Right.
They've got to find things to do that can participate in the second half of the year.
Yeah, understood. I mean, I know some of your picks here today. You had, for example, Crown Castle, right, in the world of real estate, and we think about telecom and the towers. Tell me about a name like that. Why could that be something to go on?
So we have a theme, Nicole. We want to benefit from those stocks that have been hit hard by the excessive tightening cycle. Now that the Fed is winding down, what are those stocks we can take advantage of that, with the tightening ending, are going to actually get a bounce? So Crown Castle's down 50%, but their earnings and cash flow has been relatively steady. They've got 40,000 towers. They've got a 6.25% dividend yield while you wait. And we think as this normalizes over the next couple of years and demand for data goes up, this can be a double over the next 24 to 36 months.
What did you think about the GDP notching lower, for example? I mean, does that give the Fed, as you said, the okay?
Yeah, it gives the Fed the okay, certainly a pause. In September. And then by November, I think we're going to get enough data with the inflation, with the jobs report, which we saw the ADP, probably the non-farm payrolls will come in a little lighter. And if they just back off and they can keep rates elevated but stop hiking, I think this economy can just hum along.
You know, the whole idea for the Fed has been higher for longer. And we saw at least one pause, and now the question is whether or not they'll pause in September and then raise in November. With all of that happening, you also have Citi as a buy, as a name that you like. And again, financials have been somewhat out of favor of late. Yeah,
this is another one that was hit by the tightening cycle. It's down 50%. It's trading at 40% of book value. So 60% discount to book, 50% off the tangible book. Trading at 6.8 times forward earnings compared to its historic multiple of 10 times. They're selling off a lot of non-core assets to raise cash. They're going to be buying in stock. They've got to bring down their costs. Their efficiency ratio hit 69%. The market doesn't like that. They've got to bring it down to 63. And if Jane Fraser delivers on her plan over the next few years, it's going to be a $90, $95 stock. So another potential double over the next 24 to 36 months.
Yeah, we just were talking about this name with John Kaufman, and he actually, his trade was a bearish out of the money put spread, and he was talking about that critical price level of $40 and noted that if it breaks below $40, it could see follow through selling. Would you say, is that a buying opportunity, or is that a hold the moment kind of thing?
Yeah, Nicole, that's all noise to me, because basically I'm buying a business at a 60% discount to its liquidation value. So if it's a 63% discount to its liquidation value, I just top up and buy more and increase the position.
And he's also looking more near term as he's doing some of these trades. In the meantime, what about the TLT?
I'll tell you, this is the most crowded trade by large traders and speculators. They're the most short the 10-year treasuries than they've been since the bottom in 2018, right before you had that huge rally. So you always want to take the other side. Commercial hedgers have been buying the heck out of the 10-year treasury. And when that happens, they're always early, they're always right if you look at the commitments of traders from the CFTC. And we think that as the Fed gets out of the way, you're going to see a huge bid. You know they put $1 trillion of supply on the market in the last couple of weeks. As that's worked through, you're going to see a huge bid into the end of the year from pensions that have long-term liabilities that want to lock in that 4.5% yield from the 10-year Treasury.
You sent us a lot of great information, but I'm going to pick up on the crowded trades, because since you mentioned the crowded trades, and I was thinking about technology and China.
Yeah.
You had China in there too.
I know, no one wants to talk about China. I'll tell you one thing, the most crowded trade is long tech. So we think that's going to underperform. It doesn't mean it's going to crash. We own Alphabet, we own Amazon from the lows in last fall. But short China, the worse the headlines get, the more bullish it is, because they're going to have to do the stimulus. You saw Raimondo come out of there, Secretary Raimondo come out of that, very positive stuff. You see them cutting mortgage rates to get money in consumers' pockets, stimulate the housing. They just backstopped the large failure in the housing market. But what you're going to see is huge consumer stimulus, fiscal stimulus coming to a theater near you. And when that happens, if you look at the internet sector, their earnings, Pinduoduo you saw yesterday, Baba, Tencent, were all very strong. As soon as that stimulus comes, they're going to be the major beneficiaries, and there's a tremendous opportunity if you look out 12 to 20.
And we're going to be talking more about Pinduoduo in the show. Thank you so much,
Thanks
Thomas.
for having me, Nicole.
It's great to see you.
Yeah,
Thanks
likewise.
for being here in person.